What's up everybody, welcome to the Stocks channel. My name is Cory and today in the stock market we had another volatile day and we are still getting rejected at resistance as SPY is now sitting right on top of some very critical support. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 0.84% and we could see a continuation of that rejection from that resistance right around 375. And we are still sitting right on top of extremely critical support, which is right around this zone at 366. Now keep in mind the market structure is still a downtrend of lower highs and lower lows, so there is still the possibility that we are going to complete this structure by the end of the month and go down here to retest the lows at SPY 350 or possibly even put a brand new low in the 340s and possibly even lower. So remember, this is a downtrend until it's not, which means the bulls have everything to prove and the bears still have the advantage of the trend. Now there is another way to view the market because we are still sitting above the 20 simple moving average, is that we could put another higher low and still make an attempt to take a stab at the resistance trendline of resistance at 378. In the event the bulls were able to break above that level, they would go all the way up to battle the big bear sitting right there at 390. So for that reason, SPY 366 on this daily chart is going to be a very important pivot, because if we continue lower, we had the pivot already at 375 and we're going for that next leg lower. But if we do get a bounce from this zone, then you're going to have another bullish higher low, which is very likely going to give the confidence to the bulls to push for another higher high. And then we could see a continuation of the short-term uptrend. But you do have to keep in mind we are still in the medium-term downtrend. And of course, because we're in a bear market, we are also in a longer term downtrend. So you really need to manage risk right here at SPY 366, or if you're staying short, your risk level is still going to be up here at 375. On a break above 375 and 378, you instantly need to get more bullish for a retest of 390. And 390 is still the critical risk level that defines this bear market, and that is why the big bad bear is just waiting at that level. So just keep in mind SPY 366 is your critical level to know when to pivot. If we do get the bounce, you're instantly going to start looking for another possibility of a higher high at that critical resistance zone. And if we continue to see more selling, you're looking for a retest of the lows around 350. But I do want you to also consider looking for support at the 200 weekly simple moving average at 358. So know these levels and have a trade plan for either scenario, because nobody knows for sure what the market's going to do. You need to have a risk management strategy that is around following price action, and then you can start to become a very profitable trader in this volatile market. On the Nasdaq 100 triple Qs, we were down 0.51%. And the triple Qs intraday hit the top of our resistance trend line, which is the resistance in the downtrending channel, and that level was 275. Right on cue, the bears stepped in and shorted the triple Qs all the way back down to the 5 EMA, and we did get another close below the negatively sloping 20 simple moving average. So without a doubt, the bears are still out there and they are still in full control of this downtrend. And that is why I continue to caution you that there is still the possibility we are going to make that next leg lower by the end of the month of October. Now the bulls do have this level right here at 267 that they could use, and they could try to defend that level as support for the possibility of another higher low. So watch 267 as a possible support level, but do respect the fact that the bears are still in full control, and on a break below that level, you'll be looking for a retest of the lows. Now, if the bulls get a bullish breakout, that will be the break above the resistance trend line, which is going to be right around 274 to 275, and that is going to allow the bulls to close the gap around 280. And then possibly push for a retest of the critical resistance zone at 282 up to about 284. Critical risk level for the triple Qs where the big bad bear is all the way up here at 293. So we are not out of the woods of this bear market until we can go defeat the bear at that level. On the Dow Jones DIA ETF, we were down 0.34%, and we see another rejection from the top of the upper Bollinger Band and the negatively sloping 50 EMA, but we are still closing at the support level of the neckline breakout that does define the double bottom breakout, which is obviously a bullish pattern that could send us up to about 320. Critical resistance on the way to 320 will be 308, the critical risk level at 312, and then we should start running to the price target at 320. Now, in the event we don't hold the neckline at 303, look for a retest of support around 298, the 20 simple moving average at 297, and if we lose all of that support, there's very likely going to be a bear raid all the way back down to retest the lows and try to close that weekly gap at 285. On the Russell 2000 IWM ETF, we were down 1.27%, and we're right back down below the 20 simple moving average, which was that support level at 169. So the bulls will need an immediate bounce from this level, or the bears are going to try to push to retest the low at 163.7. On a break below the low, look for the next leg lower at 159.5, and the critical resistance is going to be 171, 176, and 178. If the bulls do get a break above 176, this is going to look like a successful double bottom breakout, just like we have in the Dow Jones. On the ARKK ETF, we were down 0.37% today, and we see a very clear rejection from our resistance trendline right around 37, and we're right back down to the support level right around 35. Below 35, look for a retest of 33.7, and below 33.7, we're very likely going down to 33. This is a bear market until we get all the way back above about 41 and then 47, so there is a lot of work to do for the bulls. On the VIX, we were down 2.57% as the VIX is starting to show signs of getting crushed down from the highs, and the VIX is right back down near this support level at $30, and as you can tell, the VIX is still making higher lows. The bulls will want to see the VIX closing down below 28 to get more of a bull trend developing, so watch this support level around $30 and 28, and I think you instantly need to start getting more bullish if we see the VIX continuing to get crushed down. On Bitcoin, there is absolutely nothing changing. We are still in the trading range between 19,000 and 20,000, and on a bear breakdown below support, look for a test of the next leg lower at 17,000, and on a bull breakout of 20,000, look for the next leg higher at 22,000. On Amazon, we were up 0.16% right here at the negatively sloping 20 simple moving average of resistance at 115, and the bulls now need to break back over 120 to about 121. That should be the bull breakout that could take us up to close the gap at 126. The bear breakdown will be a break below 113 for a retest of the low at 106 or the next leg lower at 102. Microsoft was down 0.41% today with a very hard rejection from that resistance at 242, and we're right back down below the 20 simple moving average of resistance at 237. You could instantly get more bullish on Microsoft above 237 and then again at 242, and above 242 critical resistance will be right here at 249. If we break down through support, that's going to be a breakdown below 232.8 and then look for a retest of the lows at 225 and 222. On Nvidia, we are up 1.19% today, and Nvidia is getting a bull breakout above the resistance trend line, which is going to be the break right here at this level at 122. Above 122, look for a quick trip up to the resistance at 135, and above 135, we should start closing the gaps to the upside. A rejection from 122 should send us back down to 115 in the previous closing low at 112. On Tesla stock, we were down 6.65% today after the earnings. We did see a sell-off in Tesla, and we almost did close below the previous daily closing low, which is right around 205. However, the Tesla bulls started buying the dip, but they did get rejected from the 5 EMA, and we're continuing to see daily closes below 209, which is going to increase the risk that we could come back down to 186.5. Now, if the bulls start pushing it back over 209, you can instantly get bullish and use it as your risk level for a test of the upside resistance at 231 and 238. On Apple stock, we were down 0.33% today, and Apple is very close to trying to break out above the resistance trendline and this negatively sloping 20 simple moving average of resistance right around 144. Above 144, we have critical resistance at 147 and 150. And if we break down and we get rejected from resistance, look for a retest of the low at 138, 136, and the gap close at 133. On the financials, we were down 1.6%, coming all the way back down to the 20 simple moving average, so the bulls will instantly want to start using this level as support, otherwise the bears are bringing it back down to $30. The industrials were down 1.96%, getting very close to the support zone around $85, so look for that as a possible bouncing opportunity. The healthcare sector was down 0.85%, right back down to support at the 20 simple moving average, so the bulls will want to use this level as support. The energy sector was up 0.09%, starting to push higher towards that resistance at 87, and the gap filled just above 87.6, so watch that as a possible upside price target as long as we have the bull trend. So jumping back over to the S&P 500, this is a very critical week of earnings, and we're going to have more critical earnings next week as well. So watch this level on SPY, which I think is the most important right now, which is right here at 366. Below that, the bears will very likely take over and try to push for that next leg lower, but you cannot count the bulls out of the fight just yet as long as SPY is holding this support zone. Be patient, disciplined, and have great risk management, and remember this is a very volatile market, so make sure you're only taking trades where you understand the trade setup and you understand the risk. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank or how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.